Decidedly down day for stocks, and Credit Suisse thinks it's about to be decidedly downward for commodities. They say they see enough technical evidence to change commodities as an asset class to negative. So they go from crude oil, industrial metals, gold. Josh, in gold, they say it's already confirmed double top. We expect further weakness at 1,600. Industrial metals also remain in clear downtrends. Brent crude change our 3 to 6 month outlook on oil to negative. What do you think about this call?
Well, I mean, gold is maybe the worst asset class I've ever seen. This is the commodity that's supposed to, quote unquote, protect us from inflation. We just had literally the worst inflation in 4 decades, and gold couldn't even get out of bed. So put that aside. So that doesn't work. Big picture commodities, let's be careful, because we know that oil demand, even in the worst recessions, doesn't really fall off quite as much as you might expect it to. Gasoline demand, it really is not a one-for-one relationship. It's not at all linear. Keep in mind, financial markets are very different from physical markets. Financial markets like bonds and stocks and interest rates, these things are driven by expectations. Physical markets are driven by supply and demand. So I don't know that it's just quite so simple as, well, the technicals and the economics tell us that such and such commodity is about to do blank. There are too many other dimensions involved. So I do like oil into the end of the year. And I would point out there have been previous situations where we've had economic slowdowns where these stocks have worked very well. I also like utilities. So I don't know that I want to translate that commentary into a trade per se.
What about you, Weiss? What do you think of this call? Makes sense?
Yeah, I think it does. I mean, look, most commodities are dollar denominated. Dollar has gotten very strong, so that makes them all more expensive. And energy was clearly the most crowded trade there was. So it makes sense that it comes off because so many people in crowd trades get in at the top, and they're the first ones to go and pressure the prices as they panic out.
Depends which one, though. I mean,
true.
Winter literally is coming, hopefully not proverbially.
I think gas can pop.
Right, nat gas is at below $7.
Yeah,
so you got to be careful along all of the commodity energy lines to say that, okay, maybe they have peaked. Nat gas can be $7 this winter.
I think it could be higher, definitely. But this is a risk-off environment, and that includes all risk assets. And commodities are some of the biggest risk assets out there. So again, I advocate being patient and waiting for a turn rather than catch the bottom.
All right, straight ahead, one of the oldest investing strategies starting to look good again in this market, at least according to one big-time investor. That debate's next.